Okay, so today what we're going to be doing is another technical analysis video. And what we were going to be doing this weekend was actually launching the Bitcoin analysis video that I wanted to send out to all of you. But what I came to realize is after having a look at Bitcoin and assessing something, I realized that there wasn't a trade opportunity I could give you, but there was a big trade opportunity I actually triggered in the previous video about US dollar CAD. So if you haven't watched episode 2 of this video, make sure to quickly jump back. You can watch episode 2, you can watch episode 1 if you want. But basically in this video, we're going to be doing a bit more of an in-depth analysis video into the US dollar CAD from a technical perspective. So I'm not going to do too much statistical calculations or give any fundamental input, but we're going to be talking about some of the slightly overwhelming trigger points and flags that have been raised on this trade that has actually set our investment vehicle in motion. So we're already invested in it, my fund is invested in it, and basically now we're going to start distributing this information over our Twitter page, our social media pages, and distribute it out to all of our students. So this could be a trade that all of you could learn from. You know, most importantly about this video, it's about learning about what I'm doing. I'm not trying to feed you investment information. I'm feeding you educational information. Anyway, let's get onto the charts, and then what I'll do is run you through the point-by-point process of exactly what I found on this trade. Okay, so basically on this trade, what I've specifically been able to identify is what I've spotted on the daily time frame. So moreover, I've spent some time looking on the weekly time frame as well as spending some time on the monthly time frame, having a look at what sort of formations are forming and what sort of channels we're dealing with. And in all honesty, there was quite a few specific points that I realized I wanted to press on when having a look at this trade. And it was actually very interesting with some of the pieces of information that I found. So firstly, what we're going to do is we're going to be starting off with having a look at the monthly time frame specifically. So the monthly time frame is the time frame that we're in right now. So if you look in closer here, what I'm just going to do is draw a simple trend line right over there. So basically what you can notice on this trend line is that there's a bit of a channel forming. So back down on this much lower level, you can see that there is price forming there, but you can also see there was price hitting this level as a resistance. So this is specifically what you'd consider a Gartley. So a Gartley being past resistance equals future support, so past support equals future resistance. So what's happened here is it's tested this level, come back down, broken through, and then use the level as a resistance. And then you can see this level bouncing more down here. But also what we have to consider as a possibility is that it might be forming a regressive channel. So that effectively means that even though price has shot up in this area above this blue line, price has actually been making lower highs month on month. So if you have a look sort of closely over here, if you draw a trend line coming down, you've obviously got the same form of a possible channel forming. Now, depending on the angle where you put it on the wicks or the body, I like to try and put it as low against the bodies as possible of the candle. You're going to see that we're obviously reaching a convergence point in this area on the monthly chart. So specifically our channels. So on the monthly chart, we've got a channel, which is, a technical point that we usually land up considering. Now, most importantly about channels is that when you're able to identify on a much larger time frame exactly where the flow of price is going, you can spot what we call a macroeconomic trend. So a macroeconomic trend on specifically FX pairs is showing you exactly what's happening on a long-term basis. Many people get onto the hourly time frame or the 4-hourly time frame and think that they can spot where the price is moving in the overall market. Don't forget, the overall market always wins. So when you go onto the monthly time frame, being able to spot something like a channel allows you to understand a bit more about the overall momentum. Think of it this way, you want to go with the biggest wave and not the smallest wave. And the monthly time frame for us represents the biggest wave. So also, most importantly, having a look at the weekly time frame was step number 2 for me. So if I go back down into the weekly, we have also got basically a few pieces of information to share before we go right into the daily time frame. But specifically, what you can see here is on the weekly time frame, we have an upward channel. So we've got price that's testing this structure incredibly well. So you can see a point over here, you can see levels being tested over here, and then price moving lower, followed by moving straight back up to that level. Now, right now, we've got price moving to a very, very similar level. So as you can see, these trend lines up here, these are going all the way into that level. So another big one is on the weekly time frame, we're also spotting channels. And basically what I'm actually doing here is just writing down point by point. So on the monthly time frame, what did I spot? On the weekly time frame, what did I spot? And then on the daily time frame, and as I go through that, I can spot things that are, let's say, for example, divergent or converging on the same sum of an answer. So let's say, for example, I spot channels on multiple time frames. That obviously means that it is obeying simple price structure formations. But if one of the channels is upwards, another one is down, and then on the smaller time frames, the channels are upwards again, that is a divergent signal for channel formation. So what I'm basically going to do is make sure that channels becomes an idea behind this trade, meaning price moving up from the support level to the resistance level in a controlled fashion on two parallel or almost parallel lines on both the support level and the resistance level. So basically now what I'm going to do is move into the daily time frame and show you a little bit more about what I found on that as well. So if we go right down into the daily time frame, I'm going to take an overall view here, because what you're going to be spotting is that there is an overall picture. Okay, so specifically when you go into the monthly time frame, these are the channels that we drew right over here. So you can see these two big blue trend lines moving downwards. But when you go into the daily time frame, that's what you're looking at. So specifically, when I zoom out all the way, you can now see this channel. So as this channel forms, you're obviously watching these very close convergence levels. So we're expecting price to move into a level up here and followed by moving down. But this is the thing. Like I said to you, where we've got a monthly channel moving downwards with a weekly channel moving upwards, we're obviously going to reach some level of a convergence point. So think of it this way, I'm just going to put this point all the way up here. So that could be a possible convergence point right at the end there, and that is at price level 1.33950. So that's specifically one of my initial convergence points. But that would be considered the furthest convergence point. But then the other one that I spotted is also a parallel resistance level that is forming. So specifically, if you go back here and you have a look at the larger overlook of the daily time frame, let's just zoom in a little bit. Yeah, let's go back. What you're going to see is this blue line. I'm actually going to change colors on it. I'm going to make it orange so we can all see it a bit better. Okay, what you can basically see here is we've got this very, very sort of strong resistance and support level over here. So obviously what you can see is this level bounced right off that resistance line. You can see it moved slightly below but came straight back above before breaking below. So it was effectively a dead cat bounce. A dead cat bounce is specifically something where price hits a support level, bounces back up, but doesn't have enough momentum to retrace back to that level. And what follows is something that looks like a bounce followed by another bounce and then a break back below that level. Have no idea why they call it a dead cat bounce. It was a Wall Street term that they chimed way, way back in the day, but that's what we effectively call it, is a dead cat bounce. So going back here, you can see also historically, there was also resistance levels in this point over here. So basically what we're looking at is over in 2017, we've got some support level tests. Earlier on in that year, we've got it again, and then we've got some resistance levels here, and then much further back, now we're going into 2016, we've got price levels testing here. And this point is actually at price 1.32296. So that orange line is 1.32296. That's effectively the point that I'm watching on the horizontal basis. And then also moving back here, you can also see that there was forms of resistance over here. As you can see, there was a failed breakout followed by a move back down and then price move back up. So you can definitely see that there's points of resistance on this area. But then more specifically, when you just go back into the convergence of those channels, which I think is the most important aspect, you're effectively seeing that this is an opening funnel. So you've got this lower area, the support area here, where this line is basically moving in a lower downward direction as compared to the upper resistance. So basically these lines aren't running parallel. So what you're effectively seeing here is an expansion of price energy. So as price energy was compressed much further down, you can see that the trend was a lot tighter back in the days of 25th August 2017. You can see that level, how price was a lot tighter, and then as it's moved higher, it's begun to expand. But the most important part is also have a look at how previously price was consistently high above that EMA, the 15 and the 30-day EMA. But then as it got to that level, it followed by breaking back below that. So breaking below the EMA is going to be a big signal if price retraces, but my convergence points really sit right there. And that point is specifically where I'm trying to get most of my orders in. So really at that specific point, what I'm trying to focus on is seeing what price do I want to enter at that price. So specifically, I'm going to say, what do you got? I'm going to say to myself, if I enter this level at X, so 1.322, how much do I think the price is going to fall? Now that is obviously a prediction that I've done myself, and that is also up to you to decide. But I'm basically saying to myself, I want to get in at 1.322. I'm going to have a look at how I want to structure my risk, and I'm going to get in at that price. So I'm already in on this trade. I entered in on this trade on Thursday. I think it was around about Thursday the 14th. So I'm in on this trade, and now what I'm looking at is if I want to add to my position, because obviously Thursday's price was a lot lower than the price today. So even though that position's in a loss, which is a slightly small loss, it's nothing I need to worry about, much further higher on the position now, I have a better entry point. So I'm going to see if I can enter on that entry point as well and possibly hold my position as long as I can. So I'm going to make sure I don't risk too much, because I know this trade is going to be a game of patience. It's a pivot point trade. We're taking advantage of a trend changing. It's difficult. It's not as easy as just trading simple momentum. So it's important that we focus closely on the game of patience and getting your trades in at the right price and at the right amount. Because if you don't manage your risk correctly on a trade like this, you're going to get short squeezed and you're going to land up losing your money. Or you're going to land up forcing yourself to close a trade because it's become too painful. So all in all, what I'm basically doing in this video is just providing you an in-depth analysis just into the basic technicals that I've found on the monthly, weekly, and daily chart, and then just talking a little bit about the price that I'm entering and where I might enter as the price moves higher. So to any of you who want to understand a bit more about why I upload these episodes almost every single week, is specifically because I run a training academy. So I also run my own investment group where I invest on the behalf of clients, but I also specifically have a big passion for education. So my training academy, it's an online training academy. We train students in about 26 countries around the world. So students are able to access an online training platform throughout the day, study through us. They also receive monthly coaching programs as well. If any of you want to find out more about that, and more about learning how to trade, invest, and manage your wealth, you can go to www.msequitiestrading.com and you'll see everything there. Make sure to get in contact with our team, and my coaching staff will be in contact with you immediately. But once again, to any of you who want to keep updated, there will be another video coming out in 3 days' time on Tuesday again. So stay subscribed to this channel. Also make sure to check out the video library. There's tons of content for you to have a look at, educational videos. Hope you enjoy, and I will see you next week in the next video. Cheers for now.